morning, traders. Welcome to the TMT stock market strategy video for Tuesday, October 18th. We had a little weakness going into Monday's trade and pretty much stabilized and rallied back for really light trading day yesterday. Really wasn't anything of significance. Markets really didn't do much. Very quiet. Yes, they closed down, but well off their lows. Very quiet. So we're going to see what happens this week. We're coming into the end of the month. And we still have really no volatility, no expansion of volatility. We did pick up a little bit at the beginning of the month, so it looks like the elections is really going to be the culprit here, and the powers that be really going to keep everything steady. You look at Deutsche Bank, who's in big trouble. They have the largest derivatives out there in holdings, that is, and their margin is huge. I mean, huge. So. Unfortunately, the powers that be, again, central banks and Fed is going to do whatever it can to keep that under wraps, at least to get to the election. And then after the election, I guess anything would go. But when we get close to the election, we shall see what happens. You have the dollar that's in front of you that's spiking really hard. You've seen this before. I've showed this to you many times. We had a little bit of a rest yesterday. And I'm going to show you gold and crude oil as well. But looking for a little bit of a rest as well, pull back, maybe a little grab to the 8 here, and then I would suspect, if you see this arrow here, get to the next swing high, which would be 25.58, 25.60, call it. That's going to be the next area. Remember, a strong dollar. No one wants a strong dollar, and if that does happen, you will definitely see a pop in the commodity sector. Now, if we get some fear in, obviously gold will money will flow into gold as flight to safety. So you should just keep that in mind as going forward. But again, this dollar here, I believe, is here to stay. And even if we pull back way back down to here, you're still going to make that higher low from this previous low. So this is the expansion out of the symmetrical triangle, right? Here's that move out. So now we want that higher low. Once we solidify a higher low and we start to move higher again, this is for real. Okay, this move is going to be for real. But again, a little too early to tell, but I do believe that the dollar money flow will be going into the U.S. dollar. Take a look at crude oil. Yesterday, if you didn't see my video yesterday, please go to it. You'll see the commitment of trader reports in bar chart format. Shows that the producers, which are the smart money, continually being short at these areas, okay, at these highs. So looking for a pullback. It's not a timing tool. You're at major resistance right now. Yesterday we had contract rollover. That does help crude oil when you have forward contracts a little bit more expensive. So it did open up crude oil higher in the overnight session, but we'll see what happens, see if we get that fade. Remember, we have that meeting in November. I still believe that you got to get a pullback first before you look to buy it. I would not buy it up here. I'd wait for a pullback at least down to the 46, 47 area, and then look for another expansion. And if we don't break that on the next pullback and then rally, then this should fail right back down to like $43, $45. All right, so just keep an eye on crude oil. Gold, to me, I think it's just consolidating at the 38% retracement here. I think gold has one more nasty move lower, and that should solidify this short-term top, and then look for a second leg higher and possibly even break the highs in gold. Next is going to be GDX. You can see here the ETF for the miners. We've kind of starting to bottom here, which is a good sign. I still want to see some positive divergence. We don't have it yet, but we're starting to form. And let's see if we can have one more nasty push lower into that 1920 area, and there I would be probably a better buyer in the GDX. Next is GLD, the gold tracking ETF, and you can see here we're trying to bottom in these RSIs and MACDs, but I still like the fact that I'd see one more push, and 115 would have to hold, otherwise you would really flush all the way back down to the January, February lows back here. Okay, so 115 is a critical, key, and pivotal support area which needs to hold. All right, that's GLD. TLT, I'm liking TLT short, not at these levels. I would like to see TLT rally on some risk aversion, money flowing back into bonds as a safe haven trade, push it back up to the 138, 140, and somewhere in this area where we have this confluence area of resistance with Fibonacci retracements, then only there I would like to look to short TLT, but not down here in the hole. Okay, and I would advise not to do that as well. Next is going to be spiders. You can see here we did break this big big bearish rising wedge. We broke it yesterday, but believe me, I want two closes below that. And if, remember, guys, if you don't know, well, let me rephrase that. If you think that the government and the Fed is not watching the markets and see some of these key levels, believe me, think again. So 212.50, we're up nicely in the pre-market. Netflix had some good earnings, IBM. So now that's going to be the catalyst as focus on earnings. And remember, guys, analysts have cut dramatically their earnings estimate to make sure that they beat. So believe me, it's but again, it doesn't matter. What price is doing is what we have to adhere to as traders. So this here, we broke down. Let's get two closes below that, and then we would get a confirmation that this big bearish rising wedge has formed and has broken. But right now, it's just one day. I want to see another day consecutive, 2 consecutive days below that trend line. Okay. Next is going to be the 60-minute. Just want to show you. You could see they're fighting at 212.50. 212.50 needs to hold in a very big way, and they've done so for many, many weeks. You could see that all the way going back to September, all the way back up in here. So look what happened. We've gone nowhere. Back and forth, backing and filling, back and forth. Same thing up in these areas. So we've really gone nowhere, guys. It's terrible. I have never seen price action this horrible in 29 years doing this. Since July. Actually, from July till now, we have 3.5 months of just basically backing and filling and consolidation. We haven't gone anywhere. So it's going to happen, though. We just need to be patient. IYT Transports, you can see here that we really broke down. We haven't gone anywhere as well. So a very quiet day for the transportation sector. Here is the Russell. Russell had a little bit of a worse day than the others, but right now just about hitting our price target, our first price target of 120. Okay, you can see that they're starting to roll over. This is our secondary leader, so we're going to need to see a little more pickup if you want to see this market move higher. And last is going to be the Qs, just continually sitting right on the TMT proprietary price channel. And yes, by the way, the TMT trading model is and has been on a sell signal for the last several weeks. So let's see if we just get some additional movement. I want to see some movement to the downside. I mean, I want to see a break at 210, and initially the next target would be in the spiders would be 202 and then 200. Okay. Hope it helps, guys. Have a great day. We'll see you tomorrow.